Good morning and welcome to BPA's second quarterly business review for fiscal year 2025. I'm Joel Scruggs, BPA's Chief Communications Officer. We appreciate you making time for this forum today. Before we get started, I want to share a few reminders. Today's presentation is being recorded and we will upload the recording to BPA's YouTube channel at a later date. The WebEx link is available on the event calendar on bpa.gov. If you experience any trouble with the WebEx, you can find the slide deck on our website at bpa.gov/QBR. One other note, our first slide here today highlights the accessibility tools within WebEx. So please take a moment to familiarize yourself with these features and use them as needed. You can submit questions at any time during the presentation, and we will respond to them during the Q&A segment at the end. To submit a question, click the three little white dots in the lower right corner of your screen, then the Q&A button, input your question, and press send. Your questions will be sent to the BPA host. Additionally, if you think of a question after today's presentation, you're also welcome to email us directly at communications@bpa.gov. We also kindly encourage you to include your company or organization name in your WebEx display name. Having your company name on display helps our panelists and others know who's participating today. All right, this morning our Administrator and CEO, John Hairston, will share an overview of BPA's second quarter operational performance, and then our newly announced Executive Vice President and Chief Financial Officer, Tom McDonald, will summarize the agency's financial performance. John will then close out the main presentation with some updates on a few of BPA's strategic initiatives. And then following that, I will highlight some upcoming public meetings, workshops, and processes, and then we'll wrap up with any questions that you have. With that, I'll hand it over to John. Good morning.
Good morning, Joel. Thanks and welcome, everyone. I'm happy to be here with you today to share BPA's second quarter results. Now, I want to start by welcoming a new voice to the QBR. I'm happy to announce that Tom McDonald will officially begin his duties as CFO May 18th, and he is here today to share our second quarter financial updates. Now, I'm very grateful to our Deputy CFO, Veronica Wittig, who stepped up to take on the CFO duties in the recent months during the hiring freeze, and also following Marcus Harris's departure in January. After regaining some hiring flexibilities, I had the chance to permanently fill the CFO position through an SES reassignment. Now, given the significant change our workforce has experienced in recent months, I took the opportunity to stabilize the leadership team and leverage the experience of a current SES executive who has the necessary background to fill this critical role. Now, Tom has extensive leadership experience at BPA, most recently as Executive Vice President of Compliance, Audit, and Risk Management. He also served as Acting Chief Operating Officer and has background in finance. Before joining BPA in 2007, he was a senior auditor for a multinational accounting firm and has experience managing financial accounting and reporting. So I'm excited to have him in this role. Now, Tom and I have a lot to cover today, so I'll get going. Now, let's take a look at our core operations on slide 6. One of the main takeaways is that we've seen improvement in several areas over Q1. Safety, corrective actions, agency net revenues, days cash on hand, and transmission reliability metrics have all improved. Now, the one area that remains red in Q2 is the Fed Hydro Force Outage Factor, which measures unplanned hydropower outages. Now, we did return several units to service at Bonneville, Lower Monumental, Lower Granite, and Grand Coulee dams this quarter, and the outage factor continued to decline this quarter. But new outages at Chief Joseph were notable in offsetting those returns. BPA continues to work closely with the Corps and Reclamation to coordinate the work and reprioritize funding to address the most impactful outages in a timely manner. On the financial side, we are now forecasting positive net revenues, which has improved our days cash on hand forecast. Now, there's a lot of uncertainty in our forecast for the rest of the year, but we are prepared to manage this uncertainty by following our financial plan and using the liquidity tools it provides. And with that, I'll hand it over to Tom to walk us through the financial details.
Thank you, John. I am honored to have this opportunity as BPA's CFO, and it is a pleasure to be with you all today for the second quarter business review. We are forecasting green on all of our financial KPIs. Before I go over our Q2 results and our performance through Q2, I do want to remind folks that about the marketplace and price water supply uncertainty at this time of the year. Power's net revenue picture may change, which may also impact some of our other financial KPIs. Also, we're continuing to work closely with the Department of Energy to carry out President Trump's directives. The Q2 forecast was developed based on information at the end of March 2025 and does not reflect the full impact of executive orders on BPA's financial forecast. Through Q2, our net revenue forecast is positive $210 million compared to our target of $70 million. IPR cost expenditures are in line with expectations, and we are currently forecasting them to be below target. Expected net revenues have increased since Q1, and our forecast for end-of-year days cash on hand has risen to 101 days. I'll caveat that debt management actions for power services are a key driver to the improvement. I'll touch on this a bit more, and it will be covered in more detail at the QBR technical workshop later today. We're certainly happy for the improved outlook, but remain mindful that there is still the potential for significant volatility for the remainder of the year. Agency capital expenditures are on track to be within the target range of $1.077 billion to $1.376 billion, with a Q2 end-of-year forecast of $1.187 billion. The debt-to-asset KPI is also on track to decrease slightly to 79.4%, down from 80.4% at the end of fiscal year 24. Related to this, our borrowing authority KPI, which tracks our available borrowing authority over a rolling 20-year period, as noted at the end of fiscal year 24, we are reporting this as green, but this assumes the use of additional access to capital tools. There are no forecast scenarios showing borrowing authority constraints in the next 10 years, but in the latter part of the 20-year period, we see constraints due to the transmission capital expansion program. However, we intend to use other available access to capital tools to ensure no borrowing authority constraints over the full 20-year period. And we'll share more on these plans at a future QBR technical workshop this fiscal year. Turning to slide 9, we'll look at the details specific to the power business line. Starting with the blue bar on the left is the net revenue target of $77 million. Moving to the second bar, we expect Power's operating revenue to come in at $124 million above target, largely driven by higher trading floor sales and 4H10C credits for fish mitigation activities. Both increases are driven by higher power prices. Moving on to the third bar, our forecast of IPR expenses is $94 million less than the target. The reduction is mainly due to lower than expected fish and wildlife execution due to slower winter months, lower conservation purchases, invoicing due to less work performed than planned, lower staffing, and less renewables purchases than expected. In the fourth bar, the non-IPR expense forecast is $100 million above the KPI target due to dry conditions leading to increased power purchase expense. The biggest increase in power purchase megawatts was seen in January and February. These purchases were slightly offset by a debt management transaction. The transaction will be explained in more detail in the power reserves discussion. Moving on to the last bar, our forward-looking estimates for power net revenue have improved since Q1, driven mainly by the debt management transaction and lower IPR expenses. Our second quarter net revenue forecast is $195 million, which is $118 million above the KPI target and a $211 million improvement from Q1. Also, an important note for our SLICE customers, the results from the Q2 forecast estimate, the SLICE true up as a credit of $33 million, primarily due to the debt management transaction and increased U.S. Treasury credits. Moving to transmission on slide 10. Starting with the blue bar on the left, transmission's KPI target is negative $7 million. Moving to the second bar, our expectation is that transmission IPR expenses will come in $48 million below target. This is primarily driven by reduced personnel because of the hiring freeze. The third bar, transmission's operating revenue forecast, is $10 million above the target. This is driven by increased sales of short-term point-to-point and southern intertie revenues, driven by favorable market prices to result in increased wheeling revenues. Looking at the fourth bar, transmission's non-IPR expense forecast is $40 million above the target, largely due to higher depreciation expense driven by more capital being placed in service and higher interest expense from greater borrowing from the U.S. Treasury. Looking at the bar on the far right, in total, our forward-looking estimate of transmission net revenue has improved since Q1, mainly due to higher than expected operating revenues and decreased IPR expenses. Transmission's second quarter end-of-year net revenue forecast is $11 million, which is $18 million above the KPR target and a $40 million improvement since the last QBR. Let's now turn to financial reserves on slide 11. Agency financial reserves for risk are forecast to be $752 million at the end of the fiscal year, a decrease of $71 million from the prior year. From the business line perspective, we forecast power to end the year with $502 million in reserves for risk, a decrease of $5 million from the prior year, but up significantly from Q1. Transmission is forecast to end the year with $250 million of reserves for risk, a decrease of $66 million from the prior year, but also an improvement over Q1. As noted earlier, the primary driver of the improvement for power is related to a large gain from debt management actions. The finance team will walk through this in much greater detail at the QBR technical workshop. Looking at days cash on hand, which is a key performance indicator associated with the financial plan, the agency is forecast to end the year at 101 days, transmission at 117 days, and power at 94 days. Note the power forecast assumes that we forego the planned revenue financing in fiscal year 24 to preserve liquidity. 60 days cash on hand is a lower threshold for both business lines to trigger a financial reserves policy surcharge. Finally, we have modeled the reserves forecast uncertainty for the remainder of the year. Because of strong improvements in both business units and a power debt management action, there is less than a 1% modeled probability of triggering the cost recovery adjustment clause for either business unit. For power, there is less than a 1% modeled probability of a surcharge with an expected value of less than $1 million. For transmission, there is a 3% modeled probability of triggering the reserves distribution clause with an expected value of $1.2 million. As a reminder, we still have half the year to go. The water picture is much clearer today than it was at the first quarter, but there's still quite a bit of uncertainty remaining with 6 months to go before year end. For more information about the debt management actions that have helped improve Power's outlook, please listen in to this afternoon's technical workshop. Turning to our capital program on slide 12, through Q2, our capital execution is on track. The blue bar on the left is the KPI midpoint target of $1.196 billion for capital expenditures. The upper and lower dashed gray lines are the target execution range for our total direct capital investments of plus 15% and minus 10% of the midpoint target. We will start with enterprise services, which includes the facilities, fleet, IT, and security asset categories. Enterprise services had a forecast of $17.4 million above the midpoint target. A large portion of this increase is facilities and the Vancouver Control Center project. This project is currently ahead of schedule, which brings costs forward from fiscal year 26. And some cost increases to materials also contributed to this capital forecast increase. Moving to the right, Fed Hydro has a slight increase of $0.7 million above the midpoint target due to a stronger than anticipated start to the fiscal year. With Skip Environment, Fish and Wildlife, which has no change from the target midpoint and is on track, and Cover Transmission, which has a forecast of $27.1 million below the midpoint target. Transmission is still evaluating the full impacts of the executive orders and the deferred resignation programs, so we have adjusted the forecast downward by 4% to accommodate already known decreases in project work. We plan to report more on specific reductions in Q3. Transmission did report as a significant accomplishment this year the Benton Scootney line rebuild, which was completed nearly 1 year ahead of schedule due to successful land rights negotiations that helped expedite the phases of construction. Finally, we'll move on to the last bar on the right, showing the Q2 end-of-year forecast of $1.187 billion for agency direct capital expenditures. This is approximately $10 million below the KPI target, but well within the acceptable range. More details will be shared at the QBR technical workshop later today. Before we move on, I'd like to give a quick update on a bond deal we priced on April 30th. While this falls within the third quarter, the success of this debt issuance is worth noting at this point. Bonneville and Energy Northwest successfully issued $945 million in tax-exempt and taxable bonds. These bonds will fund new capital on the Columbia Generating Station, refund and extend certain maturities as part of the regional cooperation debt, earn interest rate savings on refinancings, and pay off a short-term line of credit that funded Energy Northwest's purchase of nuclear fuel earlier this year. Ahead of the bond deal, all three major rating agencies affirmed Bonneville's non-federal debt credit ratings at high investment grade levels. Fitch at AA, Moody's at AA1, and S&P at AA-. Despite significant macroeconomic volatility, which has extended to the municipal bond market, this nearly $1 billion bond offering garnered nearly $6 billion in offers from over 50 institutional investors. This strong performance demonstrates high demand for Bonneville's backed debt, due largely to our sound financial management practices and consistently high investment grade credit ratings. And it allowed us to achieve more favorable interest rates than would otherwise have been possible. We finalized pricing of the bonds at an aggregated 8 basis points below pre-marketing levels, enabling significant interest expense savings over the life of the debt. This concludes the financial report. Thank you all for your time. I will now turn it back over to John.
All right, thank you, Tom. And let's turn our attention to BPA's strategic initiatives update. As Tom mentioned earlier, we are continue working closely with the Department of Energy to carry out the President's direction and DOE's priorities. Bonneville is well positioned to help advance the administration's energy goals, and I want to express my appreciation to Bonneville's workforce for navigating change in recent months while maintaining focus on BPA's critical mission in advancing our strategic initiatives. Thanks to their hard work, BPA announced several major milestones since our last QBR that I'm happy to share with you today. Now, on May 9th, we issued our final day-ahead market policy and announced BPA's intention to pursue participation in the Southwest Power Pool's Markets Plus. Now, our policy reflects years of rigorous analysis, public engagement, and a commitment to preserving the benefits of the federal Columbia River power system for Northwest consumers. Now, I'm extremely proud of the thorough analysis and public process Bonneville staff conducted over the last 2 years, and I'm grateful for the extensive engagement of our customers and others who help us shape our direction. Participating in a day-ahead market, and Markets Plus in particular, is an opportunity to assure a reliable, abundant, and affordable energy supply for consumers in the Northwest. And as our policy makes clear, it's in the best interest of our customers and the region for BPA to take action and begin next steps towards market participation. There's a lot more work to do before we can officially join Markets Plus, but we are on the right path to delivering more value for the region. So please keep an eye out for more information on next steps and how you can stay engaged in the process going forward. Now also, after years of policy and product development work, we are in the final stretch of our provider of choice process. We are preparing to have customer contract offers ready beginning in late August, with the goal of having all of them out by the end of September. Now this keeps us on track to have all contracts signed by the end of the calendar year. This success is a direct result of regional collaboration and customer engagement throughout this effort. Now, the certainty that these contracts provide will be good for BPA, our customers, and the region. On the transmission side of the business, we are addressing resource needs through the evolving grid capital projects we've proposed and through transmission planning reforms. Like many other transmission providers across the country, BPA has seen a surge in transmission demands to serve new resource and loads. Our current processes were not designed to handle this volume, so we are seeking reforms that will allow us to move projects forward more quickly and strengthen the grid. Now, I've asked our team to think creatively and innovate solutions, even if it means disrupting the status quo. A disruptive solution may be what's needed to achieve my vision, which is to drastically reduce the time from transmission request to transmission service. My desire is to get our response time down to a range of 5 to 6 years. Now, that's a big ask, but I believe we have the right team for the job. They have my full confidence, and I'm going to do everything in my power to make sure they have the resources they need to get the job done. Now, we know this, that time is of the essence, and we will work expeditiously to meet the needs of our customers and the region. Now, I'm encouraged anyone who is interested to engage in our process, which you can read more about on the Transmission Planning Reform page of bpa.gov. I'm also happy to share that we energized 2 transmission projects in Q2. In mid-April, we celebrated the new Longhorn substation. This substation will add regional value as it is capable of integrating up to 2,500 megawatts of new generation to the grid. Longhorn will also support regional connectivity. Now, eventually, it will serve as the western end of the Boardman to Hemingway line that Idaho Power and PacifiCorp are building. B2H will be a major pipeline for transferring electricity across the Northwest. The BPA also completed the Midway to Ash transmission line in Southeast Washington. The new line spans 18 miles from our Midway substation to the Ash substation located at the Hanford nuclear site. The completion of this line improves grid resilience, supports the nearby Columbia Generating Station nuclear plant, and enables critical environmental cleanup at the Hanford vitrification plant. Both of these projects demonstrate BPA's focus on reliability and ensuring adequate capacity for the future. I also have a quick update on the BP26 rate case. A proposed settlement of both the power and transmission rates is pending. And we are in ex parte until the ROD is issued, so I can't discuss the merits of the settlement, but I do want to update you on the process. Now, as a result of settlements, the rest of the 7-I process can be abbreviated. Now, I'll determine whether to adopt the settlements and issue a final record of decision by July 24th. Now, I'll close with a workforce update. It's worth highlighting that Secretary of Energy Chris Wright recently told the House Appropriations Subcommittee on Energy and Water Development that BPA will not see any more staffing cuts. BPA has been exempted from DOE's reduction in force plans based on the key role BPA plays in public safety and in achieving the department's vision for reliable, affordable, and more abundant energy resources. Now, for those same reasons, BPA workforce was not eligible for the latest deferred resignation program that DOE offered in April. The size of our federal workforce remains at around 3,150 employees. And we are prioritizing our resources to address our most urgent priorities, and I'm hopeful that we'll be able to strengthen our workforce when hiring restrictions are lifted. Now that concludes my update, and I'll turn it back over to Joel.
All right, thank you, John and Tom. Okay, now I'd like to note upcoming meetings, workshops, and processes that you can participate in. As mentioned, we're hosting the QBR Technical Workshop later today from 1 to 3 p.m. So this afternoon, our finance team will provide additional information on some of the topics discussed today. There will also be agency updates on key areas, including Fed Hydro, transmission, energy imbalance market participation, and the Western Resource Adequacy Program. You can find more info about the QBR Technical Workshop on our QBR webpage at bpa.gov/QBR. We're hosting a pair of meetings next week. On May 20th, we will host a Network Integration Transfer Service Access to Transmission Capacity Alternatives meeting. At this meeting, BPA will continue the discussion of alternatives on how to offer NITS customers access to transmission capacity. And prior to the workshop, materials will be posted to the NITS Service Additional Resources webpage. that on May 21st, we're hosting a provider of choice hybrid workshop where we will share edits on the final contract templates. Next week's provider of choice workshop is offered either in person in our rates hearing room or virtually via WebEx. As a reminder, BPA released its provider of choice policy and record of decision back in March of 2024. And since then, we've carried out a public process to determine how to implement the policy through provider of choice contracts and other associated rate methodology processes. And as John mentioned earlier, we're on track for offering new long-term power contracts later this year. And at the moment, we don't have any public meetings on our event calendar in June. However, there's a transmission planning reform workshop scheduled for July 10th. And that workshop is part of a series of workshops hosted by our transmission services organization regarding processes in evaluating and responding to transmission requests. As a reminder, you can find our customer and public meetings and workshops listed on the event calendar on our website when you navigate to the Learn and Participate tab. All right. Currently, there aren't any open public comment periods. However, I do want to share that BPA and BPA's communications organization and our IT organization partnered in launching a new public comment portal on our website. So you notice a fresh look and feel for our comments portal. It includes several enhanced features, including the ability to filter and search for comment periods, plus all the comment periods, both open and closed, and regardless of fiscal year, are on the landing page. In addition, the submitter will receive an email notification confirming that their comment has been received. Accessing our comment portal hasn't changed. You can find it at www.bpa.gov/comment. And if you have any questions or comments about the new comment portal, please email us at communications@bpa.gov. All right, that concludes the main part of our presentation today. We'll now move into our Q&A session. To ask a question, please submit it through the Q&A field in WebEx, or you can raise your hand to be unmuted. Seems like we need some game show music for the background here while we wait.
I'd like to recognize Scott Levy. You have your hand up and you are currently unmuted.
Yeah, thanks. Scott Levy with bluefish.org. John, or whoever, I'm curious to know about the Columbia River Treaty that's been placed on hold. Initially, we were getting back some power from Canada. I think it was around 250 megawatts came back, I think, in April. Is that still happening? People are asking me, and I want to have a good answer for them.
So yes, Scott. So in answer to your question, the treaty negotiations have been put on pause until the new administration kind of gets its bearing as to what it would like to see pursued. However, the entitlement portion of that was in place, the agreement in principle, and so we have been receiving those benefits and continue to do so. That does not require the final ratification, as does flood risk management, but hopefully we'll get some information as to whether or not or how we would pursue continued negotiations. But we are receiving those benefits as part of the agreement in principle.
Okay, thanks, John, and good job on handling all the chaos that's come your way. So thank you.
Appreciate the question, Scott. Okay. Do we have any others? We'll give one more moment here in case someone's mashing their keyboard, typing a question. Okay. If there aren't any more questions, we will conclude this morning's presentation. However, if you think of a question later, or if you would prefer to submit it via email, you can email us at communications@bpa.gov. And we do expect to hear more questions at the QBR technical workshop this afternoon, which begins at 1 p.m. The question we heard earlier does not need to be resubmitted. We'll be posting a response to that on QBR webpage in the coming weeks, along with a recording and transcript of today's meeting. Furthermore, if you have a topic that you think warrants further discussion, please let us know by emailing us at communications@bpa.gov, and we will look into the best way of providing you that information. We would also appreciate it if you considered completing our post-event feedback survey. We, I think, are including a link in the chat or via email to all the attendees today. And to wrap things up, we really appreciate you listening today and engaging with us in this forum and others. Our next quarterly business review will be on Thursday, August 14th, when we will be presenting the agency's third quarter of FY2025 performance results. Until then, enjoy your summer and stay safe and healthy.